Hi everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter. This is September 16th, 2023. And remember, if you want to live on the beach like Jimmy Buffett did, you've got to learn how to invest even better than Warren Buffett does now. And here's that wonderful beach just a couple of miles away from Jimmy Buffett used to walk on. So folks, get out and enjoy this weekend. And this week, the market really has gone nowhere over the past several months. We'll look at the charts and see if they could tell us anything. Now, the CPI and PPI numbers came out with a bit higher than expected, but the PPI numbers, which are the Producer Price Index, came out about 2.1%. That eventually follows through into the consumer price numbers coming down. So that's the number that we want to see. So over the long term, they look very promising. Now, our weekly stock analysis video, we look at one of the home construction stocks and see that this stock is up over 40% so far this year. That's more than doubling the S&P. And our ETF video, we look at hedging our ETFs, and we're coming up with some fantastic portfolios, folks. We show that with the two ETFs we examined this week, over the past 5 years, they have easily beaten the S&P with much less risk than the S&P. If not hedged, the top stocks more than doubled the S&P. So if you want to hedge that downside, you're going to have to give up a little bit of the upside, but we'll take a look, and you're going to love this, folks. And here's the market this week, and as I said, we go back a couple of months in here, and we can see this market really hasn't done too much at all. And we had a beautiful rally on Thursday and lost it all on Friday. So right now we're sitting on the 20-day moving average. This is the S&P 500, and the top line and the bottom line are volatility bands. And boy, this market is staying right between those bands over the past couple of months or so, except right down in here when we had a little bit of a correction in the market, which gave us what we thought was a buying opportunity down here. But the market gave us this buy signal right in here and then just kind of flattened out and is going up and then one day and then going down the next day. So we can't tell where this market's going, but it looks stronger as we go along. So we're not worried so much about the downside, but it can't get any momentum to the upside. And don't forget, the Federal Reserve meets this week. They don't expect an interest rate rise, but they do expect one before the end of the year, and I'm talking about the market. And when we look at a more of a short-term chart, we can see this blue line in here. That's the S&P 500 50-day moving average. The green line is the 20-day moving average. You can see they're running close together, and the market this week did go up above that 50-day moving average right in here, and Friday lost it all. But overall, we're still working on this bullish signal in here. But if the market comes down too much on Monday and Tuesday, then we would have to change our outlook on this. But right now, this looks fairly decent in here. And down here, you can see where the intermediate term indicator has just flattened out to absolutely nothing. So it's not giving anything away. And the up days and the down days, these vertical lines, the gray lines represent the volume. The gray lines represent the volume on the up days. The red lines represent the volume on the down days. And so far, the volume is not giving us away. But we had a couple of good days in here in the past week. So we do like that. And portfolio protection, well, the September 15th portfolio put, and this is about a $135,000 portfolio, so we have 3 puts, and we like to space them out in case the market does move. And today or yesterday, the September 15th put did expire, so we went out and we bought the December 15th 410 put. This is the SPY. The SPY represents 1/10 of the S&P 500 SPX. So you can hedge a portfolio that's as small as 135,000, even smaller than that if you want. And we want 3 puts for about $135,000 portfolio in effect at all times. So we had to go out and buy the December 15th, heading into the weakness of the September and October periods, maybe before we get a rally into the end of the year. So folks, it was a fairly good week. The numbers came out a little higher than expected. which is not good for the market because the Fed is trying to slow down the economy, and we'll see what it does, or what the Fed does this coming week, whether it raises interest rates or lets them be a little bit, and to let the news filter in. So the hurricane is past us. It's heading up north. It doesn't look like it's going to hit the U.S. at all. It'll get some waves, get some wind, you get some rain. But for the most part, go out, go for a walk, and be with your family. Enjoy yourselves. And folks, the market will be back with us on Monday, and we'll be here also. Okay, folks, stay safe. We'll see you next time.